Talk Radio is the place for all the fallout from the EU referendum.
Talk Radio. We'll get you talking.
Yeah, this is Danny Kelly. I decided to call this programme What the Hell, not because I'm in disagreement. The people have spoken, but what the hell is going on and will go on. We'll try and review what's happened in the last 36 hours, what will happen in the next week or so, and how that will affect us heading into the next 10 years. We've heard from John Ashmore there, giving us a general feel of what's been going on and the things that have caused him to be up for 18 hours before trying to move house today. Let's get a view now on, we've seen lots of charts, lots of lines going up and down to represent the markets and the economy. I'm delighted to say that economist and wealth manager Jonathan Davis joins us now. Good morning, Jonathan.
Hi, Danny.
Thank you very much indeed for joining us. I believe, and I hope you don't mind me saying this, you were all for leaving. Is that right?
Yes.
Okay, and I'm only asking the question because I think, obviously, now that we have left, the people who wanted to leave will have to take some responsibility for what's happening. What is happening at the moment?
Take some responsibility?
Yeah.
What do you mean by that?
I mean, well, because if you open Pandora's box, you'll have to see what happens, yeah?
Open Pandora's box? What do you mean by that?
Okay, how can I explain this?
What kind of language are you using here? It's very accusatory.
No, Jonathan, it's not at all.
Of the people voted to leave the EU. We've decided to move from statism to independence. What's the problem?
Well, it's no problem. I'm asking you where we are this morning and all of that, particularly in the markets.
The markets are where the markets always are. All anyone has to do is look at my Twitter feed, look at my website, indeed listen to my own radio show, No Names, No Pack Drill, and they will see that I've been saying for months that the market doesn't give two hoots about Brexit. Maybe in the short term, maybe for a day, maybe even for a week, but ultimately the markets don't care. I'll tell you what they do care about.
Good.
They care about the slowing global economy.
Yeah.
They care about China slowing down. They care about America heading into recession as we speak. We care about the UK had 3% growth in 2014, 2% growth in 2015, and the official organisations are saying about 1.5% this year. It's clear that the global economy is slowing down. That's what the market cares about. That's why the stock market's been selling off for ages. That's why the pound has been selling off for the past 2 years. And that's why, last point, all you have to do is look at the global bank shares, and they are at the lows of 2008, at the height of the global banking collapse, and yet we don't know what's going on in the background, but I'll tell you, the smart money in the market knows that the global economy is going into a tailspin. All you have to do is look at the bank shares.
So, Jonathan, and I've got no reason to disbelieve you whatsoever, if that's the case, the decision by the British people, which, despite you saying I was being accusatorial, I voted to remain with a very, very heavy heart. I've got to be honest, because the European Union has borne down on me in certain ways. But let me ask you this then: if what you're saying is right, then it doesn't matter. It won't affect the British economy. You're saying. I think you're saying the mere fact of us leaving won't affect us. It's much wider considerations that are going to decide whether we do well or not so well in the years to come.
That's exactly what I'm saying. The markets don't care. I'll tell you. The pound was down heavily overnight and Thursday night as the polls were coming in. The FTSE was down 10%. Do you know what? I wrote a note to my clients at 10:30 yesterday morning, 2 hours after the stock exchange opened, and do you know what? The stock market had risen 6%. So it was down 4% from the previous day, but it was up 6% from the overnight trading. In other words, the market was already stabilizing itself. The markets don't care about this vote. They care about the global economy.
Okay, then, and you're the perfect person to talk about. Then you've been telling us that there is you can see it in the figures. There is a slowdown. That's evident, and we've seen what's happening in China and places like that. Use your crystal ball, if you don't mind, Jonathan. And I know people pay for your services for this, but for the rest of us, the overall picture. What are we heading for a repeat of what happened 7 or 8 years ago, or is it a different set of scenarios now? What's going to happen in the global economy if that's what's driving our wealth, our health, our financial health, rather than things like Brexit? What is happening? Yeah. What is going to happen?
Aligned to that, I'll say this. What is totally immaterial is the price of the pound to people, to the economy's well-being or otherwise. I'll tell you what, the currency that is far more important, 100 times more important, is the Chinese yuan, because, of course, we buy practically everything in our houses now from China, manufactured in China, as the Chinese yuan is now at its lowest level in over 5 years. China is therefore exporting deflation to the West. That's one, if not the most major reason why we've got no inflation at the moment, because we have to pay less to get the same stuff from China. And in a debt-laden society, the last thing asset prices want is deflation. And China is exporting it willy-nilly, and that is the biggest thing in the economy. And I'm telling you, again, to repeat what I said earlier, China is massively slowing down. America is going into recession, the two biggest economies on the planet. I tell you, to answer your specific question now, I have said that, unfortunately, 2008 is likely to be the hors d'oeuvre, the next one, and I expect it to be happening between now and 2017. Going into 2018, it will be the main course. Because, why? In 2009, to get us out of the mire, they slashed interest rates in the UK from 5% to 0.5. We are slowing down as you and I speak. The next time we go into recession, they can't slash interest rates. I'm telling you, it's game over.
What will happen then?
Well, there will be a huge economic crash. There will be the crash that actually, and I know this is going to sound strange to a lot of people, it's what we should have had in 2009. But they averted it for their own political and professional reasons. But we should have cleared out the system then. Instead, what they did was they borrowed globally thousands of billions of pounds, euros, dollars, whatever, and they kicked the can down the road. And what do we have now? In America alone, they put together $24,000 billion of stimulus. And what are they getting for it? They're going into recession. So they've got all that massive debt. They can't slash interest rates. The US rate is 0.25%.
Wow.
Ours is 0.5%. So, all you have to do is spend 2 seconds thinking about it. In the last 40 years, whenever we've had a problem, they've slashed interest rates. They cannot do that the next time. I do not say this with a smile on my face, I assure you.
Thank you very much, and fascinating and wonderful to talk to you. And sorry we got off such a bad start there, Jonathan. Lovely to talk to you. I'm sure you're one of the busiest people in Britain just now. Thanks for joining us here on Talk Radio. That's Jonathan Davis, economist and wealth manager, with a dire warning there